Live chat. I'm going to try something different today. Because I don't think people care about how deep my voice is. There, I'm live. Now I'll turn on Do Not Disturb. We're going to pull this up. We're going to pull this up. Hit the thumbs up button. So what do I have real quick? Let me see. I've got to QQQ, short squeeze, price earnings. There's that. We're going to go home here. Morning, Joe. Energy transfer. I need to buy energy transfer. What's it trading at? I don't even know. Let's see what the biggest insiders. Yeah, energy transfer is still the biggest insider shit. Boyle, by the way, is going nuts. If you didn't know. I'm look at energy transfer. I looked at this for a guy on YouTube. Dave, I think. Let me see. Yeah, Dave on YouTube. Asked about the TTT. This is the Ultra Pro short 20-year treasury. Look at that. Kind of goes in with Tony Dwyer. I listened to a great episode of the podcast On the Tape this weekend. Transpider Labor Day sale. I don't know if they have it yet. Let me see. Transpider.com. Pricing and plans. Do. They make it so difficult sometimes. Let me see something. Let's see. Plans and pricing. Yeah, 60% off. Thought I got an email that there's a special. I don't know. Let me pull up Active Trader Pro. Let me see what the email is. Wah. I'm going to get into scans here in a little bit, so hang tight. Power Apprentice subscribed. Ooh, Power Apprentice. Dude, you could help me with electrical issues that I have. Labor Day is just around the corner, and TrendSpider will be back with some of our hottest deals on our plans. Okay, I'll mention it. Okay. I'm going to put this up in my notes. There we go. Okay, I don't have to go over, but I will log in here. Let's get out of here. We'll get out of here. We'll go over here. Bum, 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 bum. How much is Tesla up in pre-market, man? That's the big one. 2%. Still valued high. not crazy to get into, but definitely not cheap. Morning, Q-tip. Your boy, by the way, is hurting all weekend. The mouth has been harsh. SPY. Good article on NVIDIA. Great thread that you may want to look at. Let's bring up that thread. This is a great thread, by the way. I retweeted it. But, I mean, it's... Guy did a masterclass with... I don't know if these are his things, but 10 incredibly great visuals. Dollar cost averaging makes everything irrelevant. Cash is short-term safe, but long-term risky. Stocks are short-term risky, but long-term safe. That's the one that hit home. Expect the market to play all kinds of mind tricks on you like this one. $10, woohoo, went to $20. $10 went to $30, then it went down 20, and you're upset. Yeah. Watch the business, not the stock. There's the business. There's the stock all over the place. Buy damaged stocks. Avoid damaged companies. This is Target, for example. I'll go over all this stuff. But it was a fantastic thread, I thought. Okay, let's go to the market scanner. And I'm going to scan real quick. I have a 1 o'clock appointment with the doctor about my mouth. MPLX got a cross up. Coke got a cross up. BAC. I forget. Coke's got it's funny. Let's do a screener. I'm going to do a screener. And I'm going to go to all. And I'm going to do the index. And I want to look at the index of any PE that is over 10. So there's 24 of the 30 that are over 10. And let's sort them. I wish I could do forward PE, but they don't let me do that. I mean, there's banks and energy. I mean, American Express at 16, Caterpillar at 16, Travelers Companies at 17, AMZN. I mean, these are the average. You know, Chevron at 10, it's energy, so it's not getting a PE. But you look at United Healthcare at 21 versus the top one of Salesforce, 209, or I'm sorry, PE of 551. Merck at 90. I mean, which would you rather have, Merck or United Healthcare? You look at the Walt Disney Company at 67. Which would you rather have, the Walt Disney Company or Coke at 60? I mean, either or. Look at the valuation. The PEs are just all over the place. But Johnson & Johnson at 33, I'd rather have United Healthcare at 21 than Johnson & Johnson at 33. Oh, is it? Let's see. Marvell had that's from when these guys hyped up. I think, Christian, it's when they hyped up. Yeah, it was the earnings. This was their earnings where they hyped up AI. This was the reality of AI. Maybe I'll bring that up. Maybe I'll bring that up with NVIDIA because I've got a long thing about NVIDIA, their buyback, and all that stuff. A good example of the AI hype is Marvell earnings was created hype of their last earnings. Yeah, 100% Christian. I think this is 100. It'll get down to 49. And I think at that point, you take a look. It's still fairly expensive. Let's go over here. I like these scans though to try and find some beaten down companies. For instance, if we just go to the NASDAQ 100 and we do the same kind of thing and look at the low PE, Kraft Heinz Company, Sirius XM, Charter, Biogen, they've got super low PEs. Qualcomm at 14. You're getting a chip company that's in the self-driving chips for Volkswagen. GE Healthcare at 17. I think that one has more of a chance of growing than even United Healthcare, because United Healthcare has grown so much, and GE Healthcare is still going to get paid by Medicare and stuff. So, Christian, great point out on Marvel though. I don't own that one, but I've wanted to trade it. But I like that one. Okay, let's get back to the Goldman Sachs. We're going to go, let me see if there's anything in my brokerage holdings that's different. Nope. Oh, Morgan Stanley. Yes, I do own Morgan Stanley. I don't share my brokerage list. And the reason I don't share my brokerage list is a lot of, oh, wow. Covered ETFs entries, RYLD, QYLD, XYLD, DJIA, DIVO. The reason I don't share my actual brokerage holdings with people is just I would rather not people copy me. I do my trading portfolio but I don't include everything in that Savvy Trader. I include a lot of it that I believe in, but come on, don't follow me. That's not what I'm here for. I'm here for and DPST. We have a cross up in DPST. Look at that pullback. Look at that pullback. But yeah, I got a great note on from I forget his name, and I'm sorry if I forgot your name, but it was a really nice note about how much he's learned from listening and stuff like that, and from the podcast and the newsletter. He's a paid newsletter subscriber, and how much he learned. Let's see, Vanguard. Entries. And that's what I want. I want people to learn. I don't want people to follow me. I'm not Kelly OG. Which, let's see what Kelly OG is doing. We haven't checked in on good old Kelly. Let's go to YouTube. And we'll go to Kelly OG. I don't follow her, so I don't see her a lot. But, she comes up because I've been there for so long. Oh my God. How I made $6.5 million by the age of 20. Hey, kudos to her, but I've got to play this.
New York is
I dropped out of high school right when I turned 16.
Dennis Goldad, he's 15.
at 15.
Yes.
Who are some of your most notable investors?
Peter founder.
So what's the most you've done to date?
There's a morning process, 15 million.
Right here, insane.
How's it going?
You're really good. It's good.
Kelly OG.
Hunter from WAP. This is Ike as well. We're here to make Kelly more money by being on our platform. So
Head of
super
strategy.
pumped.
Well, we got to hear a lot about their platform. Because
Head
it
of
is
strategy.
insane.
I mean,
came
listen,
through
they've
and
got
literally
impressive
washed away the
offices
industry.
and stuff.
And one thing that I think is very profitable is being a disruptor in an industry. So we're going to hear more about y'all's story.
100%. Before we do that, let's go up. Let's see what everything is
let's
going
go
on.
off this.
Do it.
WAP.io. Sell any product using WAP.io. Yeah, it's all sales. And these guys are
So I'm
writing
speaking
code.
from behind, guys. This interview has absolutely blown me away just from today. So I'm super excited for this portion.
Oh, I can't
But
watch
first,
this.
I'm going to introduce you to two
Morning,
very important
Sherry.
people.
Oh,
I
I
know we
can't
met
watch
two very
this.
important people downstairs, but right here, insane. So why don't you guys go ahead and introduce yourself?
Yeah, so I'm Cameron, grew up in Chicago. Steve and I met when we were 14. I dropped out of high school
Growth
right when I turned
officer.
16, and we've been building together ever since.
I'm Steven, just exactly what Cameron said. Also from Chicago. I went to NYU, and we've been building a lot of cool stuff.
And they are the co-founders of WAP. And WAP is an absolute, I was saying it downstairs, industry destroyer. I have had
WAP.
so many people that I knew there were other platforms migrate to WAP because they just have unbelievable services. And so today we get to talk about all those services, and we get to find out the true story of WAP. But I think this is where you'll find the most entertaining and the most interesting.
Explore the marketplace.
Because I
Sports
already heard a
picks.
little bit
so
about it.
you can sell your
tiny
sports
bit.
picks.
I'm going to ask you a couple questions, but first, I just want you to start and tell me what WAP is and how it founded.
Cameron and I met when we were 14, and we met in this Facebook group. It
Jesus.
was a sneaker reselling group. So people would go and they would bring their shoes they got, they post them in the Facebook group, and they try to sell them. So it's kind of like a bunch of random people online with weird usernames and
Reselling.
trying to
Life
sell
hacks.
shoes. Cameron and I met in the Facebook
Food,
group.
travel,
I DM'd
business,
him,
pr-
Facebook messaged
business.
him. I think Cameron was looking for an iOS developer, someone that makes iPhone apps. And I messaged him. I was like, I can make iPhone apps.
At 14?
At 14, yes.
Yeah.
Cameron was like, who are you? I don't believe that you can do it, blah, blah, blah. And then basically I was persistent,
watch
and
this.
we built.
I mean, they're providing a business. I get it, but oh god. Morning, Sherry. Okay. So VYMVTV. Let's go to. I don't think they're scamming anybody. I just think. They're allowing people to basically charge and sell things that are bets. And it's not regulated because, hey, if you pay for somebody's opinion, you're just paying for their opinion. Fiverr at a cross up. I don't think that's a bad business, to be honest with you. Neo, SMMT. An oldie but a goodie. It's at $1.78. It's been in that slide ever since it got the bump. Never covered this gap at 330. It's got that gap down there that's a little worrisome. Goldman Sachs. We talked about Goldman Sachs. I think that one's got to bounce back. But let's go to the Dow. Dow 30. It's going to be Goldman Sachs. Is it Goldman Sachs in the Dow? Yeah. Yeah, I don't have a problem with a kid dropping out of school. I mean, you know, plenty of people have dropped out of school and gone on to become successful. PG. Intel. 3M and Dow. But, you know, more people have stayed in school and become successful than have dropped out of school and become successful. So, that's not my biggest issue with these guys. It's that they're flexing. And when you flex, you've got an inherent problem. You know, flexing just has never been something that, in my mind, actually made sense to follow. JD PayX. Okay, let's look at the S&P. I have a snoring dog next to me. Wow. Dow. Bank of America? Yeah, it does have one. Oh, I've got that one already. CVS. CVS, I don't trust that business. PG, we've got Intel. Duke Energy. I mean, I can put it in there. Why not? I brought it up before. It's just utilities of MetLife, insurance company. Schwab. Is this the second leg up? Booking. No, the Bank of New York. I've said that's not a bad one, I don't think. I think from down here, I've been saying the Bank of New York at about 40. It made its way to 46. Ooh. Colgate Palmolive. And Citibank. Shittybank. Okay. There's our scans. Let's go back into the strategy tester. One thing for the live folks that I will tell you that I was going to do yesterday, and I got just wrapped up in Netflix on The Lincoln Lawyer, was I was going to take Apple, the grade 8, Apple, Amazon, all of those, and go from a daily and take it back to August of last year and take the peak, just go from there and go where we are today. 12 months, 1 week, and 5 days. You're up 1.4%. Just FYI, 1 year, 1 week, and 5 days. Apple is up 1.4%. Just understand, that's how low we went. So you went low in October. You went lower in tech in January. I'll keep that one up there. Let's go to Amazon. Maybe I didn't get that lazy. And we're going to go to a daily. And we're going to go to August. There's the August high. And we'll go over here. And it's not exact, but it's 1 week, 1 year, 1 week, 2 days. You're down 10%. Let's go Google. And we'll go to a daily. And we'll take this. And here's the August high. And Google, you are up 6%. So it's not, you're kind of seeing my hypothesis here is that timing matters. And with the August highs from where Jay Powell spoke last year, you've got a quite different, let's see, this was the August high. And then with Meta, why some of these are actually, this is up 54%. Some of these are reacting differently than others. We'll go to Microsoft. And then I'm going to have to put this in my notes. And I'll publish these. Boom. NVIDIA. We'll go daily. And where's August? right here. And bum 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 bum. And then we'll go to Tesla. And let's go daily. This was the August high. Okay, I think that's the grade 8. Let's see, Apple, Amazon, Google, 1, 2, 3. Why is it not showing up? Meta. Oh, Netflix, I gotta do. Netflix. Daily. And we have our October highs of last year. We can go August highs. Let's go August highs, because that displays the difference. Now we've got NVIDIA. Okay. Well, you guys can see it. So I'll publish those. That's Daisy, Christian. Daisy is the loud snorer. Penny's a proper lady. Okay, let me look. Okay, so we're going to go over Monday, Trend Spider sale, Tank, Bought and Sword, SPY. There have been only 7 other inside weeks. So we're going to have to go weekly. So essentially what an inside week means, it means that the bottom of the previous week wasn't touched and the top of the previous week wasn't touched. There's only been 7 in the last 2 years. The following week was green 86% of the time with an average return of 1.1%. So, okay. We're going to take that. We're going to put that up there. Okay, Target CEO. Target CEO sold. Motherfucker. Target's getting taken out of the core portfolio. I'm going to do this. I'm going to put this at the top. We're going to cut that. And I'm going to take this Tank. It's Twinkies. If you didn't know, Tank is Twinkie, or I think it's TWNK. I think it's just auto-corrected. TWNK. I think that's Twinkies. Okay. There we go. Oh, let me go to to Twitter. I'm going to find my Twitter because I think I retweeted this one. There it is. Yeah. We're going to copy link to post. Oh, there we go. I've got the link there. Huh. I guess I didn't notice it. YouTube. Okay. Okay, I've got my stuff. Okay, let's do this. Does this pull up all my listening stuff? I don't want you to know that when I listen to like music, I'm a 15-year-old girl, an emo girl. But that, yeah, I'll keep that up. Maybe this is better. Yeah, this is probably better. This is probably better to bring up. Yeah, we'll just leave that up. I don't think you need to see all the songs that I listen to and stuff, but we'll leave both of them up. Okay. Okay, I'm just going to record now, and it's going to be video. The sound may sound different on Spotify. For anybody that listens on Spotify, it may sound a little different. It just may. By the way, I cut my own hair. Yes, I do. And I screwed it up. And from this webcam shot, you can really see it. But we'll do big head to start off the show a little. Okay, why not? Good morning. It's Monday, August 28th. We got 3 days left in the August debacle. It's June was awesome. July was awesome. August, my birthday month, not so awesome. We've been down ever since. I want to start off the episode with saying, TrendSpider emailed me, and I'm not sure if I'm allowed to say this, but essentially Labor Day is, this is the email. Labor Day is just around the corner, and TrendSpider will be back with the hottest deal on all plans starting Wednesday, August 30th. So Wednesday, deep discounts up to 65% off. They're available for those who sign up for a free 7-day trial with the sale period with an extra 5% off when prepaid. So here's the deal. You're going to go here to to my Linktree, LINKTRE, or just the link down below for TrendSpider. Whatever platform that you're listening in, all the show notes have a link to TrendSpider. Go to that link. On Wednesday, you'll see the best deal. It's a Labor Day deal. It runs from Wednesday, August 30th to Monday, September 4th. I will tell you, if you're on the sidelines about TrendSpider, take it on Wednesday. I think you do. There's some type of incentive. I don't exactly know what it is, but there is some type of incentive where it basically the sale decays over time. So each day you're losing 1% off. You're losing 5% off. I think on their Black Friday last time, they were losing like 5% every day. So if during the week of Black Friday, if you waited, you lost 5% every day off the discount. So I think that's the way that it goes. But if you want, go and look. Keep looking at this link on TrendSpider. It says it's 65% off. That's one of the best deals that I've seen over the 5 years that I've had TrendSpider. 3 years that I think I've had them for about 4. So I've been using the platform. It's fantastic. You guys see me use the charts. If you just make sure you have enough in your trading portfolio to make it worthwhile. That's my only caveat. You really need to have enough money that you're trading with to make it worth the while. I think it'll come out to be about $400 for the year. You can do it by month. They'll have a monthly subscription service as well. But you'll really need to, for me, it's the year. I mean, listen, if you can't make $400 on a couple of trades, and it does save you money, bull or bear market, the algorithms save you money, the charts save you money. Go into our Facebook group and just ask anybody who has TrendSpider. Just put up the question, is TrendSpider worth it? I think 100% of the people would vote yes. So I don't want to skew anybody, but they will be having a huge sale. Now, over the weekend, I listened to this. It's the podcast is called On the Tape, and it's running on empty with Tony Dwyer. If you don't know Tony Dwyer, he's a market analyst. He is fantastic. What I did was I went to Scribbler, and I said, hey, can you summarize this episode for me? And I'll put the link of the summary in the newsletter. So if you're not signed up to the newsletter, get signed up, because it'll save you from having to listen to all the boring crap that I listen to, even though I was on edge. If you don't know Danny Moses, he's one of the dudes in The Big Short, and he's on this podcast, and they're talking about the economy. Again, the newsletter is dailystockpick.substack.com, or go to my link tree. But in this summary, you can see it puts down the chapters, and it goes over bullet points. Danny predicts that stocks are running out of buyers and expects a market correction similar to July 2000. So essentially what they were talking about was Tony was saying, hey, when good news is good news, that's when you want to get into the market. He said, so far, bad news has been good news. And when he's talking about bad news, he means when jobs are down, that's good news, because that means the Fed is actually making sure that inflation comes down. When good news is bad, meaning that when jobs are being added, and that's good news, means the Fed has to tighten up more. And so interest rates go down. They have to stall the economy. What really stood out for me was they went over, and it's somewhere in the episode, I'm not sure if it caught it on the summary or not, but they were going over the analysts' average S&P earnings for next year. And the average S&P earnings are up about 5%, which would indicate the S&P should be up about 5%. So what's the market missing? Because, and like Tony said, you're getting 5% on a 1-year treasury, on a 2-year treasury. Why would you risk 5% on the S&P when everybody's expecting it to go 5% in the face of a Fed that wants to stay higher for longer, in the face of the U.S. paying 30% of what it takes in taxes out, it just in interest, which hasn't been something that we've had to pay in years past? Why would you want to take the risk and just not take risk-free, which would be a treasury bond? So great points. It scared the crap out of me. It did point out to me that as we're going down, I think you want to add to it. And Tony made a great call. He said, and remember, these are the two of these guys, Tony Dwyer and Danny Moses. Danny Moses was in The Big Short, but Tony Dwyer was one of the guys who was one of the analysts going to the office with Danny Myers, talking to him about what they're seeing in the economy. So you got two of these guys who made one of the greatest calls in history, who were basically saying, hey, the market's going to crash. They're saying that the market's going to crash again. But Tony points out, and it's brilliant, he said the one thing that you didn't have back in 2007, 2008, where it was possible, this crash, you're absolutely 100% seeing that when something happens like Silicon Valley Bank, the Fed immediately jumps in and jumps in big. Now, mind you, that Silicon Valley Bank stuff could have gotten out of hand. The Fed jumped in and said, nah, we're not going to have it. We're just going to save it. And they didn't call it a savings program. They didn't call it a rescue program. They named it something else. You can name a tiger whatever you want. What's the thing that, if a fucking horse has a horn on it, it's a fucking unicorn. You can't hide a unicorn. So it is what it is. And he said the Fed's going to save it. Don't fight the Fed. But he did point out when good news is good news, that's when you want to get in. That right on the screen, you'll see this is SPY. And SPY right now is at 439 in pre-market. You're at 442, up about 0.5%. It does look like it's a green market. You can say we've slightly pulled back on the this is the weekly. So this is the weekly. Slightly pulled back on the MACD. But one of the things that I want to point out on the weekly, we'll go to the 4-hour and see how the 4-hour looks so you can see. But one of the things I want to point out on the weekly is SPY last week had an inside week. And so what an inside week means is you can see this, the low was 433 and the high was 448. That was 2 weeks ago. Last week, the low was 435, which is above 433. And the high was 445, which is below 448. So you have an inside week, meaning that that candle is inside the last week's candle. There have just been 7 inside weeks for the S&P in the last 2 years. The following week was green 86% of the time with an average return of 1.1%. So what do you want to do? Maybe what we do for this week is we go over to our levered ETFs and we find a bull S&P. Let's see. What is one? I should have this handy, but I don't. SPXU. SPXU. It's a triple levered. That's the SPXU is the Ultra Pro Short. SPXL is the Ultra Pro Long. So SPXL, maybe you turn 3% this week. The algorithm had you buy in here at 88.02. You're trading at 85.91. In pre-market, you're up 1.4% at $87. I'd probably wait for a little bit of a dip maybe today because, again, your average return is 1.1%, and this one's already up 1.4. Maybe you could get 2% out of that if you bought it right now at 87. But I'll write that down. Let me write this down, SPXL. We'll check it next week. I'll put a note in to check it next week. But the inside thing really kind of pointed it out to me that, hey, maybe we want to look at this. But let's go back to SPY and we'll run the 4-hour algorithm on SPY so you guys can see where it's at. You can see the gap down here. We're still in. MACD hasn't crossed down. MACD's just kind of fluttering there. The RSI is in no man's land at 45. Your 50-day is still going negative. Your 9 and your 21 are starting to turn around. If you see that 9-day cross up on that, on the 21, kind of bullish. So, but again, listen to that on the tape podcast. Understand September and October are weak months as well. It's not like this is getting an incredible turnaround at this point. So I want to talk about NVIDIA, and NVIDIA announced their buyback. And the buyback, NVIDIA, I read an article on NVIDIA. I'll include it in the newsletter, and there's a couple of things. NVIDIA shares traded at 45 times forward 12-month earnings estimates as of Wednesday, compared with about 19 times the forward earnings of the overall S&P 500. 45 times versus 19 times. That's expensive. On the tape podcast, Danny Moses points out that in July, I think 2000, somewhere in that neighborhood, they pointed out that fiber holdings were going to just shoot down. I think it was JDSU, he was saying, reported a quarter like NVIDIA reported. And JDSU was doing fiber. And essentially, they said, hey, this can't go on. There's something wrong here. JDSU went out of business and essentially never posted another profitable quarter. They were bought, I think, by Google or somebody. But that's where we're at, is NVIDIA's trading 45 times. I am not purchasing NVIDIA. I do think that we get down to this gap at 430. I don't think it's a favorite right now. They have an October event. The catalyst is not the ex-dividend date of September 6th. I think the catalyst is the event in October. NVIDIA stock buyback is the 5th biggest repurchase announcement among U.S.-based companies this year. So it's not even the biggest. Companies commonly repurchase their stocks as a way to return capital to shareholders. Such buybacks can benefit a stock's price. You've seen this in Apple. They reduce the supply of shares and increase demand and can boost earnings per share. a closely watched investor metric. So as NVIDIA buys back their shares, their earnings per share will go up, which will cause the stock price to actually go up. Here's the note. But while shareholders often see buybacks as an encouraging sign when a company's stock appears cheap, NVIDIA's shares have shot up 220% in 2023 alone, leaving investors searching for the reasons behind the company's move. Meanwhile, several other mega cap tech companies, and growth companies have announced even bigger buybacks this year, like Apple, $90 billion, Google, $70 billion, Meta at $40 billion. Tech companies tend to prefer using cash for buybacks over dividends because if they are on the hook for a dividend every quarter, that may hinder their ability to take advantage of growth opportunities. That's the key issue. They don't pay dividends because once you start paying a dividend, the market expects you to continue paying a dividend. It's one thing for these oil companies to pay special dividends on top of their normal dividend, but it's another thing to actually announce a dividend and continue it forward. You see this all the time. There's a great article on NVIDIA, the valuation, as I mentioned, one green flag for NVIDIA and one red flag. I'll post that in the newsletter so you can read it. Overall, I think NVIDIA is still on my buy list. I'm not taking it out. I still I don't own it in my retirement. I have not repurchased it. It's getting up there at 460. My plan is to rebuy it. Don't know where I'll be rebuy it, but in the paid newsletter this weekend, I explained my rationale. I explained where I might buy it, price points, things of that sort, and what I'm planning on doing. Plans can always change, and this is why I don't want you to necessarily copy me. I want you to figure out your own plan. But I do think that there's a range here that I put in the paid newsletter this weekend that I think is a very good plan. This yellow line is the gap that it kind of came back to fill after it gapped up on the previous earnings. We didn't see a gap on this earnings because all of the movement was pre-market. Remember, all of the movement in NVIDIA was pre-market. By the time the stock opened, it was back to where it traded. So I want you to be extremely careful with this one. After listening to that podcast on the tape, I think we should be extra careful with this. It doesn't mean that I'm not going to buy it. It just means I'm going to be extra careful with actually purchasing it. And a good example is Marvell. And it's probably a little bit over because, again, NVIDIA is by far and away a different monster than everything else in AI. But Marvel, Christian pointed out, he said on YouTube this morning, Marvell's starting to fill their gap down. Well, what happened was, if you remember Marvell back here on May 25th, they announced earnings and they said, we're seeing unprecedented demand for our chips because of AI. And that's all they said. And I don't know that they necessarily raised their forecast. I don't remember specifics, but that gap you can see. Essentially, it gapped up. It went from, let's see, it was trading here at about 46. It went up to 64. So it flipped around. Yeah, it went up to 64. It got up to 67.99. Today, it's trading for 53.33. It started to fill that gap because when they announced earnings, they didn't see the huge AI bump that NVIDIA did. They didn't see the huge AI bump that everybody else is promising. But it's only one quarter. But it probably will fill this gap down to about 49. You'll get the 49s in there. But that's a great example of AI hype. And it's perfectly, it's within one quarter. So how fast can things turn? That's how fast they can turn. Now let's talk Tesla. Because here, this is Elon went live on X, formerly known as Twitter. He went live with version 12 of full self-driving. If you guys haven't seen this particular one, I'll put the link in the description. But it's not great quality. It's pretty grainy. It's not fantastic. It's pretty boring to watch, to be honest. There is a great, and I mean great, summary of this on YouTube that I'll include.
Elon's low-quality live stream that seemingly showed a new.
And this one is even better to watch. AI Driver. Essentially, what people are saying is that this is a moment that will go down in history. And if you don't know, so currently my Tesla, everybody else's Tesla, Joe's Tesla, anybody that has the Tesla, if you have full self-driving, you're on version 11. And version 11 gets little upgrades and stuff like that. I don't know anybody who actually trusts version 11 to drive them around the city. And the reason is because when you get to right-hand and left-hand turn lanes, it's super hesitant. And it's not great. And that's why when you look at AI videos on full self-driving on YouTube, they're sped up. They speed through it because you can't see a lot of those hesitations. It's not great. The difference is, and we've been waiting for version 12, version 12 takes all human code out of the equation. What they trained version 12 with, it's trained with video. Enormous improvements. This is big for Tesla. Because if they can get this right, essentially version 12 could be licensed to other car manufacturers as, hey, here's your self-driving. You just have to put 8 cameras in. We'll provide you the software, and Tesla gets a licensing fee. So for anybody that sells a car with the cameras and stuff in it, then boom, they get a licensing fee. Whether the customer actually subscribes to it or not, they'll get a licensing fee. It's enormous. There were 2 things that stood out to me in the drive. The first was how smooth it was. They left the Tesla factory parking lot in Fremont, and there was construction. And Elon even pointed out, and I don't know how much you trust Elon, but he pointed out, hey, this construction wasn't there. So it's not like it pre-mapped it. This is brand new construction. Went right through the cones, and the cones were kind of, a little iffy. The other thing it did, it went through a roundabout. I was crazy. There was also a moment where the car had to make a left-hand turn, and it crossed the yellow line into a turn lane early. And the engineer that was riding, I think it was the engineer that was riding with Elon, pointed out, hey, that's how most people do this, left-hand turn thing. They get into the lane too soon. They don't do the 25 feet left-hand turn. They actually get in 50 feet before. So it was clear that the car was understanding the actual human behavior. The other thing that I noticed was it never really came. I think Elon pointed this out. It doesn't stop at stop signs. And the reason is because they trained, holy shit, VFS is up at 84. God. VFS is VinFast Auto. This is the Vietnamese auto company, EV company that's building here in the U.S. It's at 84. But the reason it doesn't stop at stop signs is because they had a hard time finding video that could stop at stop signs, because typically people just roll through stop signs. And it's not like they blow stop signs. They just do rolling stops. So, there's a lot here. And understand that if they're able to actually train via video, my Tesla, Joe's Tesla, everybody's Tesla that's on the road, when you see a Tesla, it uploads that video every night to Tesla's AI. Now, I said it. Tesla's AI. What do you think Tesla is getting themselves into with AI? They're going to have a model that trains itself. They're going to be able to do what ChatGPT, what Facebook, what Google, what all of those people do with AI, and probably license it out. So not just to car companies. This is, once you get AI in there, they highlighted it in their presentation, I think a few years ago, with the robots. They're building robots. Well, they have robots, I think, running around on the Texas campus or the California campus. Tesla is in AI. Today, Tesla is up, 1.55%. You can see right down here, it kind of gapped between 216 and 220. I would assume that's the gap that we're probably going to see on the way down. Right now, you're going up. Your RSI is at 57. Your MACD is crossing up. From a weekly standpoint, I think you're still in a downturn, but it's not a major downturn. My guess, this is the last meme stock that's actually standing. I think that 200-day, if I had to guess, That 50-day is going to bounce off that 200-day, and 240 is probably not a bad buy for this one. I may take my chances on this one just based on this exact example. I just find it incredible. Now, another Twitter thread that I will put up, 10 powerful visuals every investor should memorize, and you absolutely should read this. Subscribe to the newsletter, and I'll put this in the newsletter, the link to this one, this thread. But dollar cost averaging makes market timing irrelevant. It does. Add on the way down, add on the way up, whatever you want to do. Dollar cost averaging will help you. 2, cash is short-term and safe, but long-term risky. Stocks are short-term risky, but long-term safe. 100%. This third one hit home for me. Expect the market to play all kinds of mind tricks on you. $10 to $20, you're celebrating. $10 to $30, you're celebrating. But if it goes back to 20, you're like, why didn't I sell at 30? Yeah, F you. And that's what I tell myself all the time. Because I'm in that camp. Watch the business, not the stock. The business here, the stock. This, by the way, or 5, buy damaged stocks, avoid damaged companies. Damaged stocks, I would say, is something like an NVIDIA before. It was not a damaged company. It was a damaged stock. And the reason was they just didn't have, everybody thought, oh, there's a chip glut, blah, blah, blah. They can't sell their stuff. All of a sudden, AI comes in, they can sell it, and boom, you're seeing the revenue go up, and the stock is responding. This one, avoid damaged companies. The revenue's going down. This potentially is probably Target. I mean, sorry to say, but Target. We'll get to it in a little bit, but Target. I think that's it. But these are 10 things. I think you should read through them. Absolutely 100% read through them. Target. Let's speak of Target. I'm going to show you. We're going to go to FinViz. First, I want to look at the actual stock. The stock's down at 122. And we don't have confirmation. We don't have a buy on this one. You got you in at 131, got you out with a short little loss right here. The MACD's crossing down. I don't know that I'd necessarily get into this one, and I'll show you the reason. But 122, I just, I put this in as the support level before its old support becomes resistance. And this is why. This is what I noticed this weekend. Target CEO sells another $4 million in shares with the stock trading at 52-week lows. Look, Brian Cornell, $4 million on August 18th. Why is he selling at 130? What does he know on August 18th? Because he sold $4 million worth of shares. If he thinks it's going to 160 and he's selling at 130, he doesn't. This is the CEO. So it's multi-year lows. So I might sell, it's in a retirement account. I might sell my shares, just get out, throw it into Apple or something like that, a little bit safer. But Target, probably coming out of the core portfolio. I just don't believe in this company anymore. Twinkies, TWNK, I think it is. No, it's Hostess. Let's see, what's Hostess? Oh, come on. Hostess was sold, TWNK. Yeah, I thought I put that in. Hostess was bought, sold, and that line right there is what you're seeing. I mean, it's just been a lagging company. Gets you in at 27. It's up at 27.32, up 1%. The hype is out of it, but this was selling at 22 and then just ramped up. Look at the volume. I mean, the volume's huge. The RSI is huge. Don't get into this. Do not get into this one. It's, great. I mean, listen, they last forever. I'm going to point this out. Value today of $100 invested 10 years ago. I'll put these in the newsletter. Stock picking matters. 10 years ago, if you put $100 into Tesla, you're at $2,189, 200% return. Adobe, 1,154. Eli Lilly. I mean, look, it's not the grade 8. Stock picking matters. Tesla was the top one. Are you upset because you put $100 in and Nike and you got $310, or McDonald's and you got $299? It's 10 years. You doubled your money in 10 years. You should double your money in 7 years. The S&P doubles it in 7 years. So anything that didn't close to triple, like over 300, these stocks are underperformers in my mind. 10 years, you should probably be at least, at least 3 times your money, I would say. That's just my guess. But I'll put this in the newsletter so you can see it. What is this one? Let me see. Oh, this is a good TrendSpider video from a couple of years ago. And it goes over is the story of a new day trader and his mission to get rich trading. And it's a good example of how people just get into day trading and stuff. I haven't fully watched it. I like the colors in it. I like the animation in it. But TrendSpider put this out, it looks like 2 years ago. I'll include this in the newsletter. I think it's a pretty good video. So we'll watch that one a little bit. My weekly stock pick is Cisco this week. And it's not my weekly stock pick, by the way. This is Farouk. Farouk is European, and he makes the My Weekly stock picks. We are 2 separate people, just so you know. But Cisco is his name for this week. He's got an algorithm. Let's go look up his newsletter. I think it's My Weekly Stock Pick. myweeklystock.substack.com. His performance, so far he's down 2% in this year. His performance last year is what blew me away. Remember, the S&P was down 13%. The Dow was down. He was up 13%. This is just buying on a Monday, and it's 30 stocks. So it's not a ton. Cisco, in my mind, great quality stock for a tech. It is not overvalued. If we go over here and we look at this one, it is, the PE is 18, right in line with the S&P. The forward PE is only 13. So if they grow to where they expect to grow, you're going to come up to that 18 and you're going to see growth. Plus, you get a 2% dividend to hold on to it. The average price target is 57. Right now, it's trading at 55. The performance year to date is up 16%. I don't know that I'd necessarily buy in at 55 and hold, but this week, so far today, I think you're up slightly. I can't see the percentage on my thing, but yeah, it's My Weekly Stock Pick. If you're not subscribed to his newsletter, just go to myweeklystock.substack.com. But it's a great, he's got a great algorithm. Dave from YouTube asked me, TTT. Let's look at TTT. I think this is the inverse of the 20-year bond. I think it was what? Ultra Pro short 20-year treasury bond. Yep. So you can see, I mean, this isn't one that you necessarily day trade on. You can see the interest in the volume just spikes. I mean, it just goes nuts on certain days. This is the 4-hour algorithm, and you can see we're still in at 69.01 from July 25th. So it correctly said, hey, in the month of August, rates are going to go up. And so this is the short of the 20-year treasury bond. The 20-year actually has been going down slightly. And then now, starting August 22nd, when we really saw some selling, you're seeing it go up. So this is the short of the 20-year treasury. I don't know how it works. I don't know if you want to get into this, Dave. I know nothing about bonds. I'm just a douche on the internet. My guess is when the algorithm tells you to get in, you get in. Now, the algorithm hasn't been right on this one. Performance of this one is 82% over 2 years. The actual asset, if you just bought and held it, 152%. So it almost doubles by just buying and holding. But that's what you get in a rising rate environment, is if you get in and out, you just underperform the actual asset. And that's a great thing for you guys to know too. If you're picking stocks and you get in and out, you tend to underperform the asset. Yes, you're safer. So the 82% is great because your safety margin is, hey, at least I know I'm winning 45% of the time. I'm losing 55% of the time. But if for some reason you buy at like, say, 87, you just say, hey, FOMO, I'm going to buy at 87. And then it drops down. You just, yeah, it's just But I don't know, Dave. I'm not a bond guy. I typically don't do ultra pro shorts on treasuries. It's a protection strategy. I'm not that good. I'm just not that good. So, but I can tell you today, as far as triple levered goes, TQQQ is the one to get. I think, are we still in TQQ? I think it had a trigger last week, if I was right. Let's see. Let's look at the 4-hour algorithm on TQQQ. Yeah, up week. I think it is going to be an up week, but let's look. Yeah. TQQQ bounced off the 200-day, 37.98. So you're at 38.73. Again, 40. In my mind, this right here at 40, let's go to 40. This is your buy. Let's go to 40. This is your buy right here. So when you get below it, you buy it, hold it. I mean, you could have held it the entire time here. When you get below it, I think you buy it, and I think it gets back up there. But I think you have to pull the trigger on around 40. So I like that strategy versus buying treasuries and stuff like that. Let's go over some scans. MPLX, this is the, I think it pays a 9% dividend. This is an energy multi-partner. I don't know what it stands for. I've owned this one. I don't know that I necessarily get into it just to kind of buy and hold. It's been up there, but you enjoy an 8% dividend while it pays. And these guys have been paying that dividend. No matter what, they pay that dividend. Even during COVID, they paid the dividend. Coke, KO. I say wait till it gets under 60. It's at $60.66. It's a bit extended. I do think that 60 is, if you're going to buy long-term, just buy it. I mean, the algorithm doesn't necessarily do you any favors. You lose 3% over 2 years versus buying and holding makes you 8%. This is just a steady stock. I mean, they're going to get hurt in a recession if a recession comes, but you just buy it and you hold it. Again, I drink Coke, I drink Pepsi, so I have both of them. And Pepsi kind of crossed up last week. Bank of America, I'm going to be adding to this one. It's under the 200-day, 28.51. You're at 28.84. I think there's more bad times for the banks, but I think Bank of America is going to come out of it perfectly fine. Another bank that we talked about, looking at the book value, which I think is like $319 or something, it's getting damn close. Let's look at Goldman Sachs. What's their book value? They're having some issues. There's not IPOs. There's not stuff. Book value is $309. So you're not quite there. It's $309. $320 it gets you in. You're under the 200-day. Remember, dollar cost average your way in. Don't buy all in at once. Figure out what lot size you want and then just, divide it by 5 and add it in. If you want to add it in over a week, add it in over a week. If you want to add it in over, 2 weeks or a month, add it in over a month. That's how I'm going to get into NVIDIA. I talked about that in the paid newsletter. Morgan Stanley. I mean, again, financials, they've been beaten down. I don't think that, the problem you're going to have is that Jay Powell is probably going to raise rates in September. The market is only counting on a 17%. 17% of the people think it's going to raise. So when he raises in November, these financials could absolutely go down. It's a crazy bad time to raise interest rates for banks, because essentially what banks have to do is they have to compete for deposits. So people are buying bonds, people are buying CDs, people are buying things of that sort and not depositing their money in the bank. So the bank has to pay higher interest rates to incentivize people to actually put their money in. So banks might be a risk. I own Morgan Stanley. I own Bank of America. I own Wells Fargo. I own all that stuff. An energy company that got a cross up is Diamondback Energy, FANG, F-A-N-G. F-A-N-G is energy. I mean, I don't know. Pounding the pavement on energy. This one has done great. I mean, just enormous. Look at that. June 27th, 127, and you're up at 149. And I think you're getting like an 8% dividend, if I'm right. 7% dividend. 4.6. So it's come down. But it's up 11% year to date. Name an energy company that's up 11% year to date. FANG got one. We had a couple cross ups on levered ETFs. Meaning they're just levered against some type of indices or something. This is UMDD, Ultra Pro Mid Cap 400. This one looks like it's using the the 200-day as support right here. 1892, you're at 1918. I would be careful with these. Some of these, like UMDD, probably doesn't have a huge float out there, so the volume connecting buyers and sellers in the market might be a little bit tough. So be a little bit careful of that. The one that I wanted to point out is DPST. If you guys know, this is the triple levered regional bank bull. So this says, regional banks are gonna go up. We had this one go from 57 back here in June all the way up to the 80s with a 44% gain. 62.43, it's bouncing off the 200-day. So if you're using that 200-day as support, you could get back up there. 62.43, it's at 65 right here in the market right now. The only spider sector that crossed up is XLP, which is the consumer staples. This one, I've got consumer discretionary, because consumer discretionary actually includes Tesla, to be honest with you. That's the reason why I have XLY, and that's why I have it in the core portfolio. Consumer staples, XLP at 72. If you wanted to get into that one, we've seen the consumer, all the retail sales that you're seeing. That's why this one went from 76 down to 72. So you're seeing that one slip right there. I won't go over some of these charts, but Fiverr, NEO, SMMT, we talked about with that $500 billion buy or $1 million buy. Procter & Gamble, Intel had a cross up. 3M had a cross up with some settlement. Enphase, which is solar, had a cross up. Duke Energy, one that I do want to bring up that I'm a little bit hesitant about. I got rid of my Schwab in the 60s. Did I get rid of it? I may have gotten rid of it. No, it's in my brokerage account. I'm sorry. I still hold that one because I wanted it for long term. So I did not get rid of it. It has a buy here at 58. You could have gotten out on the algorithm and I said anytime this one dipped under 40 back here, I think I wound up getting in at around 48 back here. But I haven't sold. 66 was its high. They do have some issues. Just like every other bank, they have some issues with the deposits. This could leak into some of their other business, the long-term versus short-term. I don't completely understand this stuff. Just understand that they do have issues. I don't think it's going back to the 40s. But with a banking crisis, I think you could see this one pull back significantly. But I do think that we're going back to the 60s. You're at 59.06. I'll probably add to mine here just because I do like it. But I will not add big. It's not where I'm going huge. Citibank, or as the Chinese chef on South Park says, Shitty Bank, got a cross up. And this one is another bank. Again, if you can tell this one, it's just another bank that's been beaten down. This is at $41. They have other problems other than just interest rates. So just understand it's still a semi-broken bank. But I think the new CEO is doing all she can to kind of do everything. I mean, that RSI down there is bouncing off the 23 level. It's now at 28. The MACD's crossing up. Probably not bad to come up here and cover that gap at 43 or so. So I like that one. We had some covered call ETFs, which are RYLD, QYLD, XYLD, DJIA, and DIVO. All of those crossed up. And Vanguard entries, VYM and VTV. So if you have any questions, hit me up. Again, TrendSpider sale is going on. If you want, go to my link tree. You can join the private Facebook group. You can join Twitter. You can join Instagram, YouTube, whatever you want. Visible, $20 off your first month. The one that I would tell you to click on that actually everybody should do, if you're in Robinhood, if you're in any of these crappy brokers, click on Webull. Deposit as little as $3 in Webull. $3 in Webull. I'll put, there's links in every show description for Webull. Put in as little as $3 and you get up to 12 free shares of stock. It's fractional shares. Typically, I've gotten Snap. I've gotten Starbucks. I think I've gotten Ford. I've gotten a bunch. None of them are working out because none of them are really good stocks, and I always wind up getting them at bigger prices. But let's do a Webull check. I put $1,000 in there at the beginning of the year, and I'm going to be donating the money. I'm at $1,939. So anything that I get, I'll donate. I've bought the three stocks that I've really bought: Caterpillar, Apple, and Boeing. Those are the three that I've bought in there. I've got Gap, I've got Starbucks, I've got Google, I've got Procter & Gamble, Coke. These are all stocks that it gave me. Ford, Snap, Spotify. But I bought Cat, Apple, and Boeing. And I'm up, let's see, I'm up 4% in Caterpillar. I'm up 25% in Apple. And I'm up 3% in Boeing. So, but Webull is one that I would say take a buy on. You can gift me on any of the platforms with Venmo, PayPal, Cash App. I'm also going to start, I think, a Buy Me Coffee because I like that program. I saw that program for some creators, and I gave somebody a cup of coffee. So I'm going to start that. But yeah, Linktree has everything. If you have any questions, hit me up. I will be back. I have a 1:00 doctor's appointment. Let's hope my pain goes away a little bit. I woke up moaning today, just so you guys are aware. Yeah, it's a little bit painful. Okay, take care. See you guys tomorrow. Boo. Okay, it recorded. Whoop, whoop. So let's go to Active Trader Pro. I'll look at your comments now. Let's look. What do we have? Oh. Let's go over here. SMCI is at 257. Let's see what TQQ is up. Oh, it's telling me TQQ. See, this thing always F's up. We hit the market open and we've dropped. So we were up pretty well, and then we just dropped. So looks like the S&P, Nasdaq is up 0.43. S&P up 0.43. Let's go to 1 minute. Oh, come on. We're going to go to 1 minute. And of course, it's not letting me do it. Let's go to Apple. It's screwing up. Let's see. Stay in school. You're right, Sherry. Yeah, Christian. I think I tell this story a couple of times, but my high school was not good. My high school, they actually, we were and we still are the most successful class to ever go through that high school. But the principal stood up and said, "You are the most disruptive and crazy people I've ever taught in 30 years." And the speech was fun. ET, energy transfer. Let's see, where are we trading on energy transfer? Let's see if I can actually, if Active Trader Pro will pull this up. 1329. Yeah, energy transfer. Energy transfer, I'm telling you, that dude just buys and buys and buys. Let's go over there. I'm going to look at this, and then I'm going to go edit this stuff together. And Boyle. Joe is right. Boyle is going crazy. I need to check Mullen too. Let's close some of these down. So I can see the percentage that we're up. 1.06 on Boyle, on ET. Let's see Boyle. Let's see. I mean, 12.94. I might just buy ET at 13.31. I don't know if the dude bought more. But let's see Boyle. Boyle, you're still not in on this 4 hour. But the 4 hour doesn't do a ton. I think for something like triple levered like Boyle, I think you need to use the 65 minute. And I think you need to really pick and choose. But 65 minute got you in at 61 on Friday. So that was the right call. Got you out. You got in at 60, got you out. And then it got you right back in. The RSI is at 66, so I would expect it. I think Boyle's going to 70. I think, let's see, where is natural gas? Nat gas is at $2.78. I mean, come on. Come on. Let's see. This is I don't know how to do charts on this. That's a candle. Oh, I guess I can't do it because I'm not yeah. This is natural gas. This is looks like a daily from July of last year. This is where you'll be in the winter. I think you're going to be at $5 in the winter. So, the other thing that you want, if you want to buy something and you don't want to buy something of value that deals in natural gas, LNG. I mean, these guys essentially, listen, I said anything under 150, buy it. You got to buy in here at 163.01. You're at 163.29. NAT. Let me see NAT. I don't think I have NAT in the energy portfolio. Let me see. Oh, that's the tankers. Yeah, but I think shipping has, oh God, look at that. That candle's nice. Let's look at the 4 hour on NAT. If you're into the NAT, rig also. Let's see. NAT, North American Tankers, PE of 9, dividend of 9%. Nice. Let's see, rig, it's up. NAT is up 40% year to date. Rig is up 71% year to date. They're losing money. They don't have a dividend, but they're up 71%. I think that's a $10 stock. I think on that dip, let's see. Let's see on the 4 hours rig. NAT is you're not in on NAT, but rig. Jesus, kudos to you, Brandon. Working, going to school. I'll tell you the story. So my mother graduated from Princeton. She was the first mother of children to graduate from Princeton. And I can tell you, Princeton did not want her. It was a crazy, crazy thing. But my dad wound up working like 3 jobs to try and support the family and make sure that everything was okay and blah, blah, blah. It took him 14 years of night school to get his bachelor's degree. So I'm not sure, again, my mom has that Princeton degree, so it's out there and it's huge, but I'm not sure which one is more impressive. Because listen, they gave me the ability to, I think, so I graduated high school in 1988, and I did not start college until 1991. So Brandon, you're younger than I am. Take this advice from the old bear, and I think everybody would agree. You will have more stress than you know what to do with. Dealing with that stress is going to be a lot harder than dealing with your classes, than dealing with your bosses, than dealing with your family needing you when you don't have time. So whenever you get that stress, what I've always found was helpful was taking a step back, walking outside, going for like a 10-minute walk, And what I always found helpful with whenever I get into an argument with somebody about something, I go for a 10-minute walk, and it's 10 minutes. It's not going to kill you, not going to kill anybody, 10 minutes. Sometimes I'll take the dogs. Sometimes I wouldn't. Sometimes I would just leave, not say anything and just leave. Probably not the most mature thing. Oh, by the way, did you get your Devon under 40? Under 50, I mean. Because it's back up at 51. We got energy moving again. Meta, get it under 300. Moderna's up 4%. because your boy was early in this round of COVID. But, you know what I didn't do? I didn't go over the grade 8. I'll include those charts. Maybe I'll include those charts tomorrow. I'll include them tomorrow. But for those of you that didn't see, essentially what I did was I went over the grade 8 stocks that I have in the portfolio and stuff. We went over last August to... Are these 65 minute? No. Last August to today. So you can see Meta's up 54%. Amazon, on the other hand, has a negative trend. And we're going to go to the daily because the daily shows it pretty well. Yeah, that's why it was showing. So Amazon has a negative almost 10%. You can, if you sign up for TrendSpider, you can do these charts and take a look. Imagine buying, Amazon anywhere below this. Today's price, you're getting a decent deal. I think at 132, your 200 days finally turning positive, but you're breaking down below that 50 day. If you break down below that 50 day, UNH. Here, let's go to UNH since we haven't. This isn't in the grade 8. But let's go to a daily. And let's look at this chart from August. Because I think August of last year was a big, yep. Here you go. 532 to 492. You're down 10%. So, yeah. Stock picking matters. And Brandon, fucking use ChatGPT and Bard. If I were in school, man, algebra's tough though. And anybody that knows me, anybody that's ever sat with me for 5 minutes and talked numbers on stocks knows I ain't Rain Man. I can't figure out 10% of a $10 check. I'm dumb. Wow. That's amazing, Brandon. Your wife's like my mom. My mom's a psychologist. She got her degree and her doctorate from Rutgers. I love Bard. I'm on Bard at least 5 times a day. I got to tell you, I was shocked yesterday. I had a YouTube video that was like an hour long, and I asked Bard to summarize, and it said it couldn't. She sounds awesome. I'm impressed. Anybody that can do that shit. Come on. Raising kids, several degrees, going for a doctorate. Yeah. I assume she got her GED. I never raised kids, but I've got 2 dogs that are pretty high maintenance right now. My last dog, Johnny, super high maintenance. That fucker bit me every day. He was a dachshund, and he... So I was looking for a dog. I think it was 2008. I was looking for a dog. I just moved to Atlanta, and I knew I wanted a dachshund, so I contacted several dachshund rescue groups. And I worked with this one, Dream, here in Atlanta. And is it Dream or Dare? It might be Dare. No, it's Dream. It's Dream. And Ivy, who was in charge of the organization, kind of reached out to me probably 30 times on dogs and said, okay, let's meet this one. Let's meet this one. And I always said, listen, I'm living in the middle of Buckhead in a 4th floor apartment. And I'm gone to work 8 hours a day. This dog seems too good, too awesome to put into a crate and, not have a yard. So, and I had a house in Florida as well that I would go down to part-time. But I always said, 20 times I think I said no. And then finally she called me one day and she goes, I've got one for you. And I said, Ivy, I don't know emotionally, can I take this one? I don't want to say no to another dog. And she goes, no, you're going to say yes to this one, because if you don't say yes, it's over for little Johnny. And so I go over, and Cindy, his foster mom, we were in a park, I remember, and I bent down, and Cindy said, looked at me, and Johnny kind of crawled up into my lap, and I started petting him, not real hard, just, timidly, and he was super scared. And he had a huge spot on his head where he had no fur. It was like a bald man, but it was just a random spot. And I said, what happened to him? And they said, well, he was a breeder dog, and one day he hadn't performed, and so they poured chemicals on him, and that won't grow back. And so, he had this huge scar on his head. And so I said, well, he just seems so scared and so awesome. And at that point, Ivy said, this is amazing. She goes, you're the first person he hasn't bitten. And all of a sudden, the little fucker bites me. And it's not hard. He just, he didn't know love, didn't know what it was. Just, needed somebody to hug him. So he bit me. I almost gave him up after a month. He wasn't house trained, kind of shitting in his bed, tore everything up in the house with anxiety. Then he had some seizures, and I wound up spending, I think, $30,000 on medical care for that damn dog. TRNS. Let me look up TRNS. Transcat. It's going well. Let's look at TRNS. $804 million. It's an industrial. I mean, that's super small company. I mean, $804 million doesn't seem like a small company, but on the NASDAQ, it's a super small company. They haven't had anybody cover them since 2022, so that price target of 103 is probably a little crazy. Zacks usually doesn't give us a lot. Growth investor focused on stocks, but their very nature. Our price recommends Transcat as one such stock. The company not only has favorable growth, but also carries a top Zacks rating. Arguably, nothing is more important than earnings growth, impressive asset utilization ratio, promising earnings estimate for revisions. Zacks never gives you details about stuff. Why 80% ownership? Transcat boasts of strong institutional backing. I think it's just growth. And 80% of the institutional buyers, let's see about insider buys. You've got sales back in August at 95 and 101, but nothing huge. I mean, for the president and CEO to make almost $1 million in sale in this market cap, that kind of tells you maybe it's a little bit extended. But I wouldn't read too much into that, in that it's not like he's selling a ton. I don't know if it tells me how much he owns. You can see he bought a bunch back here at $9. So, I mean, if he bought a bunch at $9 and $11 and stuff like that, I mean, selling at 100 is not crazy. That's a 10 times return. So I don't think there's anything suspicious about it from a chart standpoint, Scott. I don't know that I'd necessarily get into this, but it's clear volume. I mean, I don't know what happened on August 17th. Let's see if the news on August 17th. It doesn't look like there's anything on August 17th. This may just be somebody finding something out, but it doesn't look like there's a ton of news on it. Insider just disposed of 1,000 shares. Transcat disposed of SEC form. Sold 590. Yeah, it looks like, I don't know that it's necessarily buy into it, because it does look like they're focusing on the selling of shares. So you might see a pullback in this one. But I don't think there's nothing that tells me that I need to buy this, after that run. Let's see what they do. Provides calibration and laboratory instrument services in the United States, Canada, and internationally. 2-segment service and distribution. Yeah, it's a compliance kind of company. Yes, Brandon. 529 is the way to go. Good comment, Christian. You can open. Here's the thing, and Brandon, I don't know too much about it, but if you're in Fidelity, I think you have Fidelity. Call your Fidelity rep, because 529s, I don't know that they're limited. Like, for instance, my HSA with Fidelity, it's not limited, the investments. I could fucking buy GameStop. I could buy AMC if I want. I can invest anything in that HSA. Meanwhile, if I had the HSA with a company, they were restricting me. So maybe check with Fidelity if you can get a 529 that's not restricted. Yeah. My buddy is he put his kids. He's got 2 kids, and they're just entering college. The last one's entering college last year. The other one entered college, I think, 2 years ago. But the 529s will greatly pay for their college. They got scholarships and stuff. So it will greatly they're going to have more money. They're going to have money to start their lives with. And my buddy had told them he's going to take the money out because I think there's a 10% penalty, and then you pay the tax on that, whatever your tax is. But he's going to, they don't want to roll it into a Roth. They want to use it to start their lives with. So yeah, call them, Brandon. I don't think there should be, and I don't know the legal portion of that, but they're really good. I mean, the guys that answer the phone, the guys and the ladies that answer the phone, I've always had super success with those people. Cleveland Cliffs under 15, I need to add to. Okay. I am going to go because I got to put this episode together. It takes me about an hour, and I got a 1 o'clock appointment to try and get my freaking teeth fixed. I am in so much pain. Yeah, 529s are great tools. I mean, listen, there's a lot. Like I said, finding out your tax situation as a family is incredibly powerful as a whole, because you should know. I mean, I was one of these guys for years that just handed my stuff over to somebody and didn't even understand taxes and just said, hey, here's $1,000 or $2,000 that whatever I owe. And I just trusted somebody, and I didn't know what went into it. Now that I'm finding out what went into it, I'm like, shit, there are so many other strategies, like tax loss harvesting, hey, let me write down this and I can sell this. Like, for instance, me living with the lifestyle that I have, I don't make $40,000. I better sell some stock with capital gains up to $40,000 in adjusted gross income, so that I don't have to pay taxes in years where I'm forced to take out larger sums of money. So, I've got a huge stock. So it's amazingly powerful to understand stocks. And Brandon, Bard is amazing when it comes to asking stock questions. It's incredible. It's really incredible. So, in fact, I may try and do my taxes this year because my taxes are pretty simple, and I'm pretty open with you guys. I do the MLS stuff, the event stuff. That's my source of income. I have income from the podcast. I make affiliate stuff from TrendSpider, and the paid newsletter and things of that sort. So I do have some income from that. Trust me, it ain't what I'm living on. And then I have dividends. And so that's essentially what I pay taxes on. And so it's pretty simple to figure out. I mean, back of the napkin, you could kind of just write that into a spreadsheet and just figure it out yourself. Fidelity provides the forms that are pretty easy to figure out. So I don't have a problem with it. So I may try and use Bard to fill out some forms and send up my tax return that way. Because let's be honest, I mean, the reality of it is I ain't getting audited because I don't have a hell of a lot of income. So the dollar amount they're going to get from me ain't much. They just threatened my parents. By the way, the IRS, my dad, he wound up screwing up his taxes. And it's because he's 80. I mean, and he forgot to send in the check. So he owed money. He paid his quarterly taxes, but owed at the end of the year. And because he takes distributions. And he forgot to pay the quarter. He forgot to pay the final one. And so the IRS comes back and says, I think it was essentially 40% in fees and interest, which was outrageous to me. So there's a way that I think it's called abatement. And we were able to say one time, old people, Brandon, here's something for you to do for an entertaining trip for you and the kids. Go to a 55 and older community supermarket. Just go there and sit at the checkout aisle. There's usually a water fountain with a bench. Watch how many people pay with checks. You'd be shocked. Brandon, essentially what he did, Brandon, the letter was you have to pay it within 30 days. And anybody that has parents that are older, or even if you're older, when you get something from the IRS, you kind of stress a little bit. My dad couldn't sleep for a few nights, but he paid TurboTax for representation. He paid the $150, I think it was, for representation because he remembered that I think it was the year 2000. It was the COVID year. He remembered he had screwed it up. And he said, I'm just on checkout. I'm going to pay the $150 so they can do stuff for me. He wound up, when he called the IRS, he couldn't even get on the phone with them. He wound up getting a pretty good representation from TurboTax, and they wound up doing the abatement and saying, hey, the guy's 80. When you're 80, you're going to forget too. And we're allowed to, take one-time abatement. So, but what's funny is my parents don't seem to trust a lot of the things that I do because they think I'm criminal in activity sometimes. Sometimes I'll skate, right up to the edge. I'm always ethical, but I'm maybe at the edge. But when I told them, I said, you should go back to the IRS and tell them you're 80 with the beginning of Parkinson's and Alzheimer's, and that, you can't be held accountable for this. So you'll pay the money. And they always wanted to pay the money because they'll pay their taxes. They don't mind paying the money. It's the fees and interest that they were fighting. And I said, you should go back for that. And they said, you're crazy. How dare you put us in this situation? Blah, blah, blah. And then the lawyer from and the tax attorney from TurboTax says, yeah, we're going to write a letter that your cognitive abilities have diminished over the years. And we're going to take the one-time abatement. And they were over the moon ecstatic. And they were like, oh, my God, so thank you so much. And I said, what the fuck is the difference between me telling you that, that stuff and then him telling, well, he's not family. Yeah, when I tell people that I am George Costanza and that my parents are the Costanzas, and it's fun when you're looking in from the outside in, but it's crazy when you're from the inside out. Yeah. I know. It is funny. Okay. I am out of here. You guys have a great day. I will write the newsletter. I will be back tomorrow. Brandon, high five. Please tell your wife she has been the highlight of the day for all of us, I think, hearing her story. And kudos to you for going back to school, man. That's pretty impressive, I got to tell you. Working with a truck, having kids and going to school, that's impressive. Fuck that George Costanza wallet. Jesus. I used to. I'm a minimalist now. 1 card, driver's license, and $100 in cash. That's all I carry. And even when I'm traveling with MLS and I have to keep the receipts, they go in a backpack. So they're organized in a backpack. They don't stay in the wallet. So I have one of those Ridge wallet things where it's just a couple of cards and you can carry cash. You can't load it up like that. You literally just can't. It doesn't fold. So, yeah.